All right, let's get right into it. Today, we're unpacking what is honestly a fascinating presentation from Bausch Lomb's Q2 2026 earnings report. Now, I know, if you just look at the raw data, it's this massive maze of charts and heavy financial jargon, but we are going to cut through all of that. Our goal in this explainer is to translate these documents into a clear, compelling story about corporate growth and strategic execution. We're going to see exactly how this legacy company is navigating the market right now.
And right off the bat, Bausch Lomb is setting a stadium-sized tone for what they're trying to communicate to investors. I mean, look at this. They aren't just talking about quiet incremental gains here. They are scaling immense, massive growth. And a huge part of that is being driven by premium product launches, like their Mibo dry eye treatment, which we'll actually get into in just a bit.
Okay, let's dive into this. We've structured this explainer into 4 quick chapters. First, a winning quarter. Second, growth across all segments. Third, the innovation pipeline. And finally, raising the bar.
Chapter 1, a winning quarter, extending the track record. So leadership framed this quarter as a major victory. Let's look at the exact numbers that gave them the confidence to do that. Here's our first massive headline win of Q2 2026, plus 8% constant currency revenue growth. Now, for a company with the sheer massive global scale of Bausch Lomb, moving the needle by 8% year over year, that is a real testament to strong underlying demand. It basically tells us that despite any macroeconomic headwinds out there, their core products are flying off the shelves and into clinics at a highly accelerated rate. But top-line revenue, that's really only half the story. The real momentum lies in this staggering 28% jump in adjusted EBITDA, excluding acquired in-process R&D. This isn't just some healthy little line item. This is a transformative leap in profitability. For us, it means Bausch Lomb isn't just selling more stuff. They are selling it way more efficiently. They're achieving serious operating leverage, which just means their revenues are growing much faster than their operating costs.
So what does that efficiency actually look like on the ground? Well, it translates directly to the real daily work happening in their manufacturing labs. Thanks to that operational efficiency, they hit a 17.6% adjusted EBITDA margin. And here's the kicker. That margin expansion converted directly into a powerful $161 million in operating cash flow for the quarter. That is real, hard cash generated to reinvest straight back into the business. Which brings us to Chapter 2, growth across all segments, the rule of 3. Let's explore the specific engines driving that top-line beat. If we break down their $1.394 billion total for the quarter, Bausch Lomb essentially operates in 3 distinct but highly synergistic spaces. You've got vision care, which is the biggest slice at $784 million. Then pharmaceuticals coming in at $354 million, and surgical at $256 million. What made this quarter such a blowout is that they didn't just lean on one star player, right? They saw robust, constant currency growth across all 3 of these segments simultaneously. Let's break down that massive vision care segment first, which grew 4% overall. A couple of specific wins really stand out when you dig into the data. U.S. contact lenses grew by 5%, and that was driven in part by a fantastic 13% growth spike in their BioTrue one-day lenses. And then, over in the consumer aisle, they saw 4% growth, heavily supported by the continued strong performance of Lumify, their over-the-counter eye drop. Now, before we look at the surgical segment, let's just quickly demystify a key piece of medical tech. An IOL, or intraocular lens, is simply an artificial lens implanted in the eye, usually to replace the natural cloudy lens during cataract surgery. Keep that in your back pocket because their surgical growth metrics rely heavily on it. Check this out. Plus 175% constant currency revenue growth, specifically in premium IOLs. I mean, that is an absolutely staggering leap. By successfully accelerating the shift toward these premium implantables, they are drastically transforming the surgical segment's bottom line. The surgical division as a whole grew by 16%, and this explosive adoption of premium lenses, that's the massive engine right behind it. Moving right along to our third segment, pharmaceuticals. Mibo is really bringing this vibrant, game-on approach to the market, and they absolutely brought their A-game here because the U.S. pharma division jumped a massive 17%. And the numbers brilliantly illustrate exactly how they pulled that off. If you compare their dry eye portfolio, specifically Mibo and Xiidra, revenues skyrocketed from $63 million in Q2 of 2025 up to $91 million in Q2 of 2026. Mibo all by itself experienced a phenomenal 44% growth.
That single product launch has basically fundamentally shifted the baseline revenue of their entire pharmaceutical wing. Okay, so that covers how they performed over the past 3 months. But smart companies are always looking ahead. Let's pivot to Chapter 3, the innovation pipeline, sustaining growth. What is going to sustain this momentum beyond 2026? To really grasp their upcoming catalysts, we need one more quick definition. MIGS. It stands for minimally invasive glaucoma surgery. These are microscopic procedures that lower eye pressure with way less risk and a much faster recovery time compared to traditional, highly invasive eye surgery. It is a massive, massive growth area in ophthalmology right now. With that in mind, let's look at their key R&D catalysts. In the second half of 2026, they're expecting to launch ELIOS in the US, which is this highly anticipated implant-free MIGS excimer laser. Around that same time, we'll get clinical readouts on a brand new dual-action dry eye drop, plus a regulatory submission for a next-gen femtosecond laser called C-Lyra. And looking into early 2027, they're gearing up to launch Lumify NXT. So this is definitely not a company resting on its laurels. This is a highly diversified path to future revenue across hardware, pharmaceuticals, and consumer goods.
Let's move on and see how this all builds into our final chapter. Chapter 4, Raising the Bar, Upgraded 2026 Outlook. When a company has a blowout quarter and a stacked R&D pipeline like that, leadership kind of has to adjust expectations. This upgraded guidance right here is essentially the ultimate corporate mic drop. Because of their sheer outperformance in Q2, Bausch Lomb actually raised their full-year revenue target up from a midpoint of about $5.42 billion to a new range between $5.440 and $5.540 billion. This proves leadership's supreme confidence in their continued operational leverage. They aren't predicting a slowdown, they are doubling down. And to really hammer home this final financial metric, they also raised their profit outlook. This new guidance targets a massive 18% full-year growth in adjusted EBITDA. So not only are they projecting more sales, but they're literally promising investors that they're going to squeeze even more profit out of every single dollar earned through the back half of the year.
Now, before we wrap up, I want to bring the narrative back to the human element for a second. It is so easy for us to get lost in the EBITDA margins, the constant currency math, and the supply chain leverage, right? But behind every single percentage point of growth, behind every unit of MIEBO or premium IOL sold, is an actual patient relying on these very vision care innovations to literally see the world more clearly. Which leaves us with this final thought. Bausch + Lomb has proven they can execute today, and they've laid out a pipeline securing growth well past 2028. But in a fast-moving medical tech space, complacency is the enemy. So I'll leave you with this. Between the implant-free lasers and the next-generation eye drops, which upcoming ocular breakthrough do you think will drive their next massive earnings beat? Think about it. Thanks for joining me on this explainer, and keep learning.